Turning back to Bitcoin now, though, because we have the price within just a few $1,000s of an all-time high on surging optimism for demand. It just crossed $62,000 in the last few minutes. We're going to discuss this now with Coinshares Advisor Meltem Demirors, who watches the space very closely. What's the new high? If we do retest that old high that we saw back in 2021, how much further do we have to go?
I have always been a Bitcoin bull. Snolly, you know this about me. Look, I think right now what we're seeing, this run up, I'm calling it the most hated rally because we were not ready for it. It started in November. A lot of analysts were calling the ETF a sell the news event. That did not materialize, obviously. It's been an incredible catalyst. 10,000 Bitcoin per day being consumed by the ETF complex versus only 900 Bitcoin a day being mined. That's soon going to drop to 450 Bitcoin a day with the halving. So the supply-demand imbalance here is really profound. Next key target is 69,000. That was the last all-time high that we hit in November of 2022. Beyond 69,000, I think the air is getting pretty thin. So I have very high expectations for Bitcoin's performance this year.
What do you think is driving the current performance? You mentioned supply demand, but it begs the question whether the halving is really already priced in to a large degree.
I think this is a great question. Look, what I look at, flows. At Coinshares, we publish a lot of great data around flows. And now with the new 9 Bitcoin ETFs, we have a lot of great data around flows available as well. So if we look at just flows, right, over the last almost 2 months that we've had the Bitcoin ETF, we've seen over $20 billion of inflows, some outflows on the grayscale side, but net, we're sitting at close to 10 billion of net inflows, which is a tremendous amount. On top of that, if we look at daily trading volume activity in the Bitcoin ETFs, yesterday we saw a new high, 2.5 billion traded within 24-hour period. That puts the Bitcoin ETFs on par with some of the largest US equities, large cap stocks. Now, the other thing that I think is really interesting is these Bitcoin ETFs, they're not offered on every platform. In fact, there was a huge campaign on crypto Twitter against Charles Schwab because they're not offering these ETFs on their platform yet. Most investors are not yet accessing these. And if we look at the recommendations coming from Fidelity on their investor portal is recommending a 1 to 3% allocation to Bitcoin. BlackRock in a private event said up to 28%. JP Morgan published a report, 1 to 4% allocation. So I think what we're seeing is these green shoots of demand are emerging, a lot of retail coming in, the trades are on the smaller side. And I think we're really yet to see what this untapped demand will look like once these ETFs are offered on more platforms.
Meltem, one thing that I'm worried about here, even though there's all this excitement and enthusiasm around breaking that new high, do you worry at all that all these retail investors are buying in at a high?
I think that's a great question. Look, the one thing I know about Bitcoin is it's really hard to time the market. This is really true of any asset we talk about. The other thing I know about Bitcoin, in the 10 years that I've been in this industry professionally, we always see higher highs and higher lows. So while Bitcoin's volatility has historically been one of the talking points around why it might not be suitable for every investor, I think over the last 2 years, what we've seen is increasing volatility across other asset classes. I mean, look at the volatility we're seeing in treasuries even, right? And in rates, that's something historically we haven't seen. So relatively speaking, I think Bitcoin's volatility is no longer as great of a concern for investors. And at the end of the day, the allocations we're talking about are not so large. And again, I think there's a huge appetite. If we look at stocks, right, they're at all-time highs. So where investors going to allocating a couple percentage points of their portfolio to Bitcoin, even with a bit of volatility, just given the supply-demand dynamics, doesn't feel like a crazy idea.
So what does this mean for other crypto asset classes? I know you're at an event that is surrounded around Ethereum, for example. Do they have as bright of an outlook as Bitcoin now? And are there tokens that perhaps are more appropriately priced to be buying in at a low?
That's a great question. I don't have token picks for you on this program, but look, here's what I will say. Bitcoin dominance is a really great metric to track. So crypto today, around $2.3 trillion market cap. Bitcoin is 50% or more of that. Historically, Bitcoin's dominance has hovered between 45 and 55%. So Bitcoin still makes up a really large portion of this overall asset class. What I will say, I'm at ETH Denver right now. It's one of the largest Ethereum conferences in the world. A lot of people here, a lot of enthusiasm, excitement about all the innovation happening in the crypto space. Next big thing we're looking for on the institutional allocation side, Ethereum ETF decision coming in May. A lot of enthusiasm around that. And as a result, I think we've seen some momentum in Ethereum. Solana continues to be an asset that we watch very closely. I've been very enthusiastic around what's happening in the Solana ecosystem. And then just more broadly, the one asset I always love to look at, I love my dogs and my frogs and my memes. The meme coins are always a good indicator. When the dogs start to run, that's really when we see large scale retail participation, and we're not quite there yet.